If you have to trade time for money, you're going to work until you die. That famous line right there is what kickstarted my investment journey. It's what made me want to invest. It's what made me want to create this secondary stream of cash flow where my money works harder for me every single day, and it allows me to make money with the money that I've earned. So one day, my money will be making so much, working so hard, that it will be enough to pay my monthly bills, and I won't have to show up to work anymore. So that's the reason I created this portfolio, and today on the Gen Z Investor channel, I'm going to be going over my dividend income for January 2020. This is my first ever income report on this channel. Every month on the last Thursday of the month, I'm going to show you my dividend income for the month, show you what companies paid me and how much, and just go through the process of tracking those dividends, watching them grow over time. I will announce what companies had dividend increases in that month, and just show you my 12-month projected dividend income. And just together, I just want to watch my portfolio grow and show you guys that you don't have to start large. You don't need to have $100,000. You don't need to be a millionaire to get started. You can start off like anyone else, just like me, young 20-year-old investor. Just throw some money in the market with a long-term perspective, be patient, collect the dividends, reinvest for more in your future, and just keep letting that money grow. So I'm just going to show you my portfolio. Let's get started. And as you can see, my $31,620 portfolio on the day have a slight increase of 0.29%. Total gain, this gain does not include the dividends received. This is just the change in price of the stock. So of my price changes so far, I'm at 4.38%, or which is equivalent to just over $1,300. For me, that's not really what I focus on because the market does fluctuate every single day, and soon enough we will be in a recession, and I expect this number to actually go into the negatives depending on the severity of the recession and how large everything drops. So I'm not too worried about the market gains. What I'm about to show you is what my main focus is. I'm really worried about those dividends and collecting those dividends every single month, every quarter, every year for years and years to come. So my portfolio here is filled with all these companies, and every single one of these companies pays a dividend. All these individual companies pay on a quarterly basis, and my big ETF basket here is a monthly paying ETF. So that's one of my main rules for my stock to be part of my portfolio. It has to be paying a dividend, and the dividend has to be sustainable. So I'll go over that in a future video, but what that means is it has to have a low enough payout ratio, has to have good earnings growth, and it has to have a strong financial future where it is expected for the company to continue to raise and pay out those dividends each year. And as I'm on that point, all of these companies have a history of raising their dividends each and every year. I try not to invest in companies, they don't really fit my portfolio if they don't raise their dividend each year, just because that cash flow is not keeping up with inflation. It's actually being worth less and less each year if they are not being increases. So that's what I look for. It has to be paying a strong and safe dividend. I usually look for between 2 to 4% dividend. But for some plays, I'm not too worried about that. Just for example, the CNR, Canadian National Railway, they pay about 1.5% dividend. So they are below that 2%, but they do have a very strong and sustainable dividend, and they do have large double-digit dividend growth. So for me, they can still be part of my portfolio. So let me jump right into my portfolio tracker. This tracker I've personally made myself on Excel, and it's nothing special, very simple. All it is the ticker symbol, number of shares I own for each stock, the current share price, which is, as you can see up here, is fetched from Google Finance. It's updated daily on its own, so I don't have to currently change that. The value of my market, the value of my shares in the market today, how much I paid for those, then it's how much I paid per share, and then the overall gain or loss. In the future, I'll be making this a little bit more complex, but just to get started, this is what I worked up. So just to show you really briefly, I'm not going to go through each individual sector, but as you can see, my financials are down $93.45. To me, that means absolutely nothing. Each of these three companies that I own pay around a 4% dividend, and I live in Canada. These are all Canadian banks, except, as you know, Royal Bank and TD have large American and international exposure, but Canada has one of the safest banking systems in the world. I am extremely long. I don't plan on ever selling these companies unless something drastic changes in the market, but I'm extremely long on these. I plan to collect the dividends for years and years to come. They all have a payout ratio of around 50%, and for that, it shows how safe and sustainable dividend growth is in the future. So that's just it. That's just how I have my little stock tracker set up. This is I made myself. I didn't buy this. It's not hard. It's very simple to implement. And as you can see here, number of shares, these are blank. I actually currently don't own these companies, but these are some companies that I have on my watch list and I may add to later. Just as I scroll down before I show you the actual dividends earned in January, I just have my value per sector, a little pie chart here to show you how diversified I am across different sectors, showing you once again, same as Yahoo Finance, my portfolio value of just over $31,600. And over here, I just have a total chart of the gains and loss per sector and total market gain of just on the prices alone of the stocks of $1,300. And now I'm just going to move over to the dividends received. So right here, I'm just going to zoom in. This right here is a new chart I created just for 2020. And as you can see, it shows the month of January, all the stocks I own in my portfolio, and if those stocks paid me that much, how much they paid. So for the month of January, I earned $106.36 in dividends. I've been paid by 5 different companies. One is the ETF that I explained is a monthly payer. I earned $52.30. From AQN, it's a utility company. I'm in Canada and they actually pay their dividend in American dollars. So they pay 14 cents per share American per quarter, which because of the conversion transferred over to about 18 cents Canadian, which is why I earned $21.17. TD Bank, large Canadian bank, has 40% of its revenue coming from the US. And both Bell and TELUS, which are 2 of the large Canadian telecommunication companies. There is an oligopoly. There's only about a handful of companies that run the telecommunication sector in Canada, and these are 2 of the 2 major players. So instead of picking which one I believe will do best, I actually just purchased both, and they were both solid dividend payers. TELUS pays about a 4% dividend, and Bell is just higher at about 5%. So as you can see here, that's a total dividend income for the month of January at $106.36. So for me, that's absolutely amazing. I just started dividend investing about 6 months ago, and this is my first month crossing $100 in one single month. And to me, I love it, and it makes me feel great to see that I did not have to work for that $100. My money worked for that. The money I've earned through my part-time jobs and through everything else I've done has been working for me harder than I can and earned me $106.36 in the month of January. And I didn't have to show up to work. I didn't have to clock in. I didn't have to put in an hour or 2 to earn that money. My money worked for me, and I earned $106 in 1 month, basically doing absolutely nothing. So as you can see on this screen here, I have a monthly dividends chart. Obviously, this is for 2020 and beyond, but because it's the first month of 2020, I only have one little data point here at 106.36. That's going to be the first ever point on this chart, and I plan to be updating this for years and years to come. And what I'm looking for this is just a consistent upward trend in my dividends. And because I continue to invest each and every month in dollar cost average into the market, my annual dividends, my monthly dividends should be going up each and every month, along with the dividend increases I expect from all my holdings because, like I said earlier, I only invest in companies who have a strong, sustainable dividend and who plan on increasing it each and every year. And the last little chart I want to show you, which is actually my favorite chart of this entire tracker, is my 12-month projected income chart. So what this is the ticker symbol of the stock I own or future holdings I plan to own in the near future, how many shares I own, the annual dividend per share for each of these companies, then the annual dividend I will receive for these companies depending on the number of shares I have. So essentially it's number of shares times annual dividend per share equals the total annual dividend I will be receiving from that company. So as you can see here, my total 12-month projected income is $1,237. That blows my mind. So if I do absolutely nothing, if I don't invest any more money, if I don't contribute to my portfolio anymore for the rest of the year, over the next 12 months, I will earn $1,237 in dividends. Not working, not putting any hours in, not trading my time for money. My money is going to work hard enough for me to earn $1,237 in dividends. And that makes me so happy. And my goal is to grow this number as fast and as sustainable as possible. I don't chase high yield. I don't invest in any stock that has an 8% yield, 10% yield, because those aren't sustainable. I look for solid, long-term blue chip dividend paying companies and I invest my money in those, looking for those long-term growth in the dividend. Again, some people have different investing styles. Some are growth investors, some are dividend investors, some like to do options tradings. For me, I like to keep it simple. I like to own the blue chips. I don't need anything crazy. For me, I really, really like that consistent cash flow. I believe it really impacts how the management and the board of directors of those companies operate. Having that dividend that they have to maintain, I really think affects decisions, and I know it affects decisions, and that's something I want the companies that I invest in to earn. And in the month of January, I would like to say VDY, that dividend of $52 I received, I showed you on the last page, that was enough to actually drip, and I earned one extra share. Same with AQN, which is trading just over $19 a share. And because I received $21 in a dividend, I actually have the drip set up, so it automatically repurchased one extra share. So now I'm at $116. So for me, that's just buying more with money. My money's working hard. It pays me, buys another share, and then in 3 months, my next dividend payment from AQN and VDY will be higher than the last one. So that's the power of dividend growth investing. While reinvesting those dividends, the money you earn gets reinvested, earns you more money next year and the year after that, so on and so forth. And my overall goal in the long term is to get this number to be enough to replace my yearly income. I'm only 20 years old, so I have another 30-year horizon at least to be invested, and that's what I look forward to in the future. This is the first ever update, and like I said, on the last Thursday of each month, I will be making these dividend updates and sharing with you all the dividend income I earned. I'm very transparent. I don't need to hide anything with you guys. And I just want to be honest. I'm using this not only to share my journey with everyone else, but also so I can look back in my future 5 years down the road, 10 years down the road, and look back and watch myself and say, wow, I really started at $1,000 a year. Now I'm at 5,000. Now I'm at 10. And I can really just track that progress and track that growth just to keep me motivated, to keep me and myself going. And I just want to share the journey with everyone else. So as always, I appreciate you watching. I'm the Gen Z Investor. Please like and subscribe if you enjoy the content. I'll see you next time.